Hi, this problem, we have a share appreciation rights scenario in which the company, uh, Walden Corporation, has granted share appreciation rights to Robert Brandt. They entitle Mr. Brandt to receive cash for any excess of the market price over a $20 option price for 4,000 shares of the company's common stock. The service period is 3 years, and the company expects that Mr. Brandt will finish the 3 years. Mr. Brandt exercises his rights on December 31st, 2019. The requirement is that he exercises this within 5 years, and he did do it in 2019. So it was within the 5 years. The quoted market price per share was $25 as of December 31st, 2019. The first requirement is that we prepare a schedule to compute the compensation expense related to the SAF for this plan from 2016 through 2019. We do this, we follow the same approach as we were doing with, for instance, fixed compensation expense scenario, where we compute the estimated compensation and then we allocate it based on the fraction of the year that has already passed. So we have we keep track of the fair value of the SAR, the estimated total compensation at any point in time, and with this, with the total compensation, we'll multiply by the fraction accrued, meaning how many years or how much of the time has elapsed at that point in time. That's how we get the compensation to date. Once we get the compensation to date, we subtract what we already accrued in the past to get the amount for this year. So to get the yearly compensation expense, we do subtract what has been accrued so far. So first, the fair values for the SAR were given for each of those years as being $3 for 2016, $4.20 for 2017, $4 for 2018, and $5 for 2019. So even though the service period is 3 years, but it did not exercise it within the 3 years. So we finished the fair value column. We just put in the fair value for each of those years. For the estimated total compensation, we're going to compute this based on the fact that he was given 4,000 shares, and at that time, the fair value is $3 for 2016. So we'll do $3 times 4,000 shares. So that's how we're getting the estimated total compensation. So we have 4,000 times 3 here. So we have 12,000 for 2016, and we'll do 420 times 4,000 for 2017. So we have 16,800. For 2018, we have $4 times 4,000. So we have 16,000. And for 2019, the fair value is at 5, so we do 5 times 4,000, so we have 20,000. For the fraction accrued so far, we're looking at how many years have elapsed relative to the total service period. For 2016, at the end of 2016, we've only completed 1 year out of a total of 3 years. So the service period is 3 years. At the end of 2017, we've finished 2 years. That's 2016 and 2017. So that's 2 out of 3. At the end of 2018, we finished 3 out of 3. Same thing as of 2019, we already finished the entire period, 3 out of 3. To get the total compensation to date, we're going to take 12,000 multiplied by a third for 2016. For 2017, we'll do 16,800 multiplied by 2 over 3. So we'll have a third of 12,000. So we have 4,000 for 2016, and this will do 2/3 for 2017. So 11,200, and this is the entire amount. We have 16,000 here, and here we have 20,000 in 2019. the accrued compensation expense, the total to date is what we have here. So it's changing based on what we have. And the accrued compensation to date, we put what we've already accrued for last year. So 2016, we don't have anything related to the plan for 2015. So we have a 0 here. For 2017, we have what we accrued for 2016. So we have 4,000 here. And for 2018, we have this that we already accrued, so 11,200. And for 2019, we have 16,000 that we accrued as of last year, so 16,000. So we'll take this, we'll take the total compensation to date and subtract what has been accrued to date. So we take this column and subtract this. So we have 4,000 for the first year. We have 7,200 for the second year. And this 16,000 minus 11,200, we have 4,800. And then we have 4,000 for the last year. When we sum all this together, it adds up to 20,000, which was what it was at the time that Mr. Brandt exercised these options. So 20,000. So we have 20,000 total, in which these amounts relate to each of the years. Once we have that, now we can do the journal entry. And we are only required to do the question asks for the 2019 journal entry. So 2019 journal entry, we're going to record the compensation expense. And so the compensation expense for the last year for 2019 is the 4,000. So compensation expense is 4,000. And at that time, we pay out cash. Remember, the deal is that we pay Mr. Brandt for the difference between anything in excess of $20. So we have cash being paid out for the excess. So we have cash of $25. At that time, the price was $25. So we have cash 25 minus 20, and we multiply this by the number of options, so the 4,000. So this gives us 20,000, which is the total for the entire time anyway. So that's the total, which is 20, which is also this one. Well, the difference is the SAR compensation payable that we've been crediting for the past 3 years. So in 2016, we credited SAR compensation payable of 4,000. In 2016, we did 4,000. In 2017, we did SAR compensation payable of 7,200. And in 2018, we had 4,800. So all this together here is it was already recorded as SAR compensation payable. So we're going to close that out by doing a debit. So SAR compensation payable for the total of the 3-year compensation that was already recorded. So that's the $16,000. And then we put a description to this journal entry to record the exercise of under the SAR plan that that happened in 2019 for Mr. Brandt. And that's it for this problem.